Global risk assets are holding steady today, with modest gains in Asia and Europe, as investors price in a high chance of a Federal Reserve rate cut in December, while U.S. cash markets are shut for Thanksgiving. Equities. Asian indices were mildly positive, led by Japan's Nikkei 225 and supported by technology shares in both Japan and South Korea. A global equity gauge such as the MSCI All-Country World Index was essentially flat after a multi-day rebound that has sharply reduced November's earlier drawdown. In Europe, major benchmarks, including Germany's DAX and the Pan-European Stocks Europe 600, saw small gains, helped by easing rate expectations and idiosyncratic movers like a double-digit jump in Puma on takeover interest. Canadian and Indian markets were also modestly higher, reflecting ongoing capital rotation into select non-U.S. markets. Rates and currencies. Global bond markets remain supported by growing conviction that the Fed will begin cutting rates as soon as next month, pulling longer-term yields down from recent highs. The U.S. dollar is broadly softer after a recent slide, with some flows moving into higher beta currencies like the Australian and New Zealand dollars and the British pound. In the UK, gilts and sterling have eased slightly following a sharp post-budget rally that was driven by a larger-than-expected fiscal buffer despite plans for future tax increases. That combination has buoyed European risk sentiment while leaving some investors cautious on the longer-term UK growth outlook. Commodities. Oil prices are slightly lower, hovering near recent lows as traders watch both Ukraine-Russia peace efforts and the upcoming OPEC Plus meeting for clues on supply policy. Gold is little changed, consolidating near recent levels as lower yields support the metal, but a softer dollar and steadier risk sentiment cap near-term upside. Crypto. Bitcoin is rebounding, trading back above the 91,000 level after sharp losses earlier in the month that were concentrated during U.S. trading hours. The move reinforces Bitcoin's recent behavior as a high-beta, liquidity-sensitive risk asset that tends to track big tech and broader risk sentiment rather than trading as a defensive hedge.